So Apple fell double digits in Q1 of 2024. They were in the bottom 10% on the Nasdaq 100, but also on the S&P 500. However, one particular Wall Street analyst, Bernstein, sees reasons to be optimistic. Before we get into those reasons, let's look at some of the price action on the higher time frame. So this is the monthly chart. I just kept this Jim Cramer's target at 200, which he had established back in, say, mid 2023, and price came within $1. Now, if you've been following my channel, you'll know that I like these round hole psychological numbers. These are levels that Wall Street is looking at. Nevertheless, scrolling down to the weekly chart, you can see how this weekly buyer's level at $173 has been holding up. However, each time price comes into this level, it weakens the buyers that remain trying to defend price from going lower. This level was established back in May of last year. You had this rallying price, couple of basing candles, and then rally out. So you had a rally, base, rally. Price came in, reacted, and as you can see, on the second entry, price penetrated the entire zone. And on the third entry, you actually had what appears to be a close, because there were no longer any unfilled buy orders, right? And where we are today is this past week price closed at the bottom of this zone here. All right, let's get into the news. So Apple fell double digits in the first quarter as concerns about weak iPhone demand and regulatory headwinds weighed. But some on Wall Street suggest taking a closer look at the stock, as the slump has dragged its value well below historical averages. Apple fell exactly 11% in Q1, pushing its valuation to well below 5-year averages, and the stock is trading at about 24 times next year's earnings, which is not a terrible price to pay, according to Bernstein. Slowing iPhone sales, particularly in China, have proved fertile ground for bearish bets and added to worries that Apple's business is maturing. But the release of the iPhone 16, expected to be equipped with AI, could spark a strong upgrade cycle. Still, the bears would argue that hopes of a new iPhone leading to a super upgrade cycle has previously fallen short, leaving plenty room for skepticism on whether an AI-powered iPhone will have enough razzle-dazzle to spur upgrades. iPhone sales reached 230 million units in 2015, has been around that level ever since. During this period of maturing iPhone sales, Apple has, however, continued to churn out double-digit earnings growth. This suggests that solely focusing on Apple's iPhone sales risk losing sight of the fundamental driver of growth is service. Services is a key part of the growth driver, led by the App Store and licensing fees, which are payments for Google and advertising. Collectively, it's over 50% of Apple's services revenues, and it's more than 60% of the gross profits. Now, recently we heard of a partnership between Google and Apple, so potentially that revenue percentage should only increase. Now, where's price heading next? Well, you get a weekly close below the 168, and you can see that price may head down to the next level of interest, which is going to be this 160 level. But I don't anticipate it going below 155. As you can see, you have this downtrend line with origins going back to January of 2022, and that should serve as what was resistance should be now support. Thanks for watching. Subscribe. Please like the video.